Is Polkadex on the right track with decentralized KYC? The crypto business is experiencing an increasing number of headlines about government prohibitions. On July 20th, the European Commission, executive body of the European Union, published a new proposal that would result in greater regulation for the cryptocurrency business, namely regulation around anonymous wallets and transactions. This had been rumored, so it wasn't really a surprise, but it was nevertheless disheartening for crypto holders who enjoy, or rely on, anonymity. This type of crackdown isn't just a huge move, it's the next stage in the process of regulating cryptocurrencies in a manner comparable to securities and fiat legislation. Even though this approach is distinct and more in accordance with the qualities and purposes of crypto, it appears to be heading towards the same level of scrutiny already applied to more traditional money markets. And the EU isn't the only regulatory body moving in this direction. The Securities and Exchange Commission, SEC, has been pursuing a slew of litigation to demand the treatment of numerous cryptocurrency goods as securities for some time. This isn't going away anytime soon, especially since some crypto projects are fighting back, for example, the SEC versus Ripple lawsuit, and some traditional monetary restrictions fit about as well as having a shoe on the wrong foot. Given the current volatility, crypto investors may face significant risks. In order to more closely adhere to regulatory rules, Uniswap recently declared that it would no longer support certain tokens, such as tokenized equities and derivatives. The simplest method for crypto ventures to deal with the situation would be to emulate regular stocks and financial products, including the stringent KYC protocols. However, a number of DeFi exchanges and projects are opposed to traditional KYC. Surprisingly, while cryptocurrency is sometimes misrepresented in popular media as being anonymous, there are few projects that actually offer this type of independence, and they are unlikely to generate enormous interest from investors globally. Instead, those programs who oppose standard KYC are doing so to safeguard user privacy, not anonymity. Is there a distinction to be made between the two? Absolutely. And some projects, such as Polkadex, are striving hard to strike a balance between full regulatory compliance and protecting their users' personal information. The Polkadex approach. Polkadex is a fully decentralized peer-to-peer order book-based cryptocurrency exchange for the DeFi ecosystem, built on Substrate and tailored for Polkadot. It was created to build a platform that combined the finest elements of both centralized and decentralized exchanges into a powerful trading tool for crypto traders worldwide. It functions as a peer-to-peer trustless environment for token exchange, as well as a parachain atop the Polkadot ecosystem, to benefit from robust security and rapid, low-cost transactions. The idea has gotten a lot of attention, investors, and traction in the DeFi community. It has the pulse of crypto traders and offers several tools tailored to their demands, such as a good user interface, interoperable bridges to other networks and liquidity sources, including fiat, and the ability to deploy bots and other high-volume tactics. Polkadex's approach to KYC is an important aspect of the subject of regulation. As a reminder, KYC, Know Your Customer, standards are intended to prevent criminal conduct, such as money laundering or permitting sanctioned individuals to participate in markets that are not open to them. In general, these policies touch very few people and are intended to prevent detrimental societal behaviors. Polkadex has indicated that they do not oppose KYC because it is a crucial step in creating a safe market for everyone and because achieving compliance helps avoid unnecessary friction with regulatory agencies. Polkadex does, however, oppose some of the standard KYC processes in place. That is, they should be accountable for the process and, more significantly, their customers' private data. They, and other projects with similar views, highlight two major concerns with current KYC methods for DeFi or any other sort of money market. For starters, KYC is not simply inconvenient. It can actively disfavor people who lack the appropriate papers or who are detected mistakenly. The existing KYC system is riddled with inefficiencies, and the rate of incorrect limitations causes significant harm to people who are affected. Second, by definition, KYC entails providing sensitive, personal information that could be used expressly for identity theft or other sorts of fraud. Under the existing system, investors must provide this critical information to any exchanges, banks, or other organizations with which they engage. When one considers how many hacks are successfully carried out each year, and how those with large amounts of KYC information would be excellent targets, it's easy to understand why this is a huge source of concern. There is a genuine case to be made for a new KYC process, not to maintain anonymity, but to safeguard user privacy and the right not to have one's information stolen. While there is no guarantee that our private information will remain secret, the more people who hang on to it, the more likely it may be stolen by those who would use it for malevolent purposes. Given these issues, how do Polkadex and others intend to strike a compromise between compliance and privacy? In brief, through the use of a certified middleman in a process known as Decentralized KYC. Decentralized KYC. Polkadex agrees that without KYC, there is no obvious path to mass crypto adoption, especially from key customers such as trading institutions. Instead of undergoing the time-consuming and potentially risky process of traditional KYC, they have collaborated with various important partners to develop a procedure that meets the needs of KYC while avoiding the difficulties mentioned earlier. While the method is outlined in greater depth on their documentation site, it is relatively simple. Users enter their personal KYC data into a wallet provided by the Kilt blockchain. Kilt then exposes the data to their KYC attester partner, Fractal. Fractal's mission is to execute fully compliant KYC checks, basically certifying their approval once the KYC is successfully conducted. They will send a cryptographic proof to the Kilt blockchain, and Polkadex will receive the zero-knowledge proof of identity. This technique works because Fractal is betting their reputation, and their operating license, on being exceedingly correct in their KYC assessments. If they are incorrect, or attempt to perform any type of fraud, or if their data is hacked, they will face a mountain of financial and legal obligations. This is not a perfect procedure, and there is always a non-zero possibility of failure at each phase. However, this provides everything required to comply with regulations and confirm that the KYC process is performing as intended. This form of entirely remote KYC process is detailed in the European Commission's report on existing remote onboarding solutions in the banking sector. While it does not specify the use of an attesting agent as part of the procedure, it does explain each stage of how merchants should onboard their consumers utilizing electronic wallets. Will it work? The future of Bitcoin is dependent on processes like decentralized KYC working to balance the weight of regulatory requirements with the efficiency required for, and designed for, a DeFi environment. Will it work? It's difficult to say with certainty, but it appears that Polkadex has been highly proactive in finding a recommended remedy and being as transparent as possible to both regulators and its consumers. The decentralized KYC method appears to be considerably superior to those on either end of the spectrum, employing standard KYC on one end or permitting anonymity on the other. The crucial issue will be whether authorities completely embrace the functions of entities such as Kilt and Fractal, which hold and verify IDs. If they can remain above reproach and scandal, and the governing authorities place their trust in them, decentralized KYC, and Polkadex's success, has a good chance. Given that Fractal has received support and funding from a German government-backed venture capital firm, it appears that we may have found a solution that all parties can agree on. Time will tell, and that time is likely to be very soon. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.